All right, October 10th, Tuesday. Again, I'm showing you the whole day so you understand. Look, there's 12 o'clock. I'm just going to go ahead and put that right there. Session. You're watching these videos, you're sort of seeing the pattern. Watch these over and over. There's a rhythm. There's a rhythm to this madness, and there's a lot of other things that go involved. And talk about it in the course, and just sort of training of like emotions and how little tips on how to like keep you not necessarily being so laser focused but seeing the bigger picture and then compartmentalizing. But for now, remember what I told you, what happened because of that consolidation. Anytime you have a consolidation, especially on a big time frame, you're going to have a big move, and those big moves ends up giving you that. You have a push, you usually have a half back or some kind of pullback, and then from that low you have the same exact move 2 days ago or 2 days later. So day break and then consolidation and then continuation, and then there you go, you had the same exact move. I say the next day you had the morning session because these are 4-hour charts, then you had the afternoon session, then you have the morning session, then you'll see that they have the afternoon sessions. You see how that's the reason why I break sessions into mornings and afternoons, because they're two completely different trading strategies. So now that you know where something potentially could go, how would you actually play this, and where can you predict what's going on? Remember, the fibs were right here. We opened up above, you go long. You go long, you target here. You sell. You wait, you see a new TPO, you consolidate. Once you see it breaks back above, your best bet is to risk, now that you're above, to go from here. And remember, in your mind, bigger picture, you're consolidating, unconsolidating, your continuation. So your measured move is, you knew that it should come up here if you measured it out to the 400 area, 15,400. Remember, bigger the move, bigger the time frame, bigger, like say for instance, you need to have that 400 and you draw a zone. Zones usually anywhere from 10 to 20 points, and that's your zone. And if you had that zone, it would have hit that area to the T. There's a lot of other things that go into play and factor in. So what you need to do is, again, you play this, score. You play this, 100-point score. You get to this point, now it's 10:30. Okay, rule, we're going to break above. You probably are losing momentum because European closes, and now you are the volume is drying up. So what do we end up doing? We chop for the rest of the session, and then remember, it's all about 12 or 12:30. Make a plan. Anything could happen. I can't predict that this is going to happen, but here's the thing. If we would have broke above here at 12 or 12:30, then yes, I would have targeted all the fibs in between and then right here for the afternoon session. But the mere fact that we broke right here, and this was in a 5-minute candle, you had to be in quick, but at 12 you could have got in right here, risked above, now that's below, and then you held, and this would have been a 100-point move. 5, 10, 15 minutes, and then boom, you sell. Always sell into this. Most people don't have ATRs. They don't see this. They don't see this. That's why it'll screw people if you don't have the right levels and understand and trust in it. So after that, you have to realize, okay, that's a big move. But still, until this breaks, I'm not going to get in and go short. I have to go long per rule. So you go long, comes up to VWAP, basically no continuation. Once you start realizing that there's chop like this, you just have to walk away. I mean, that or play this range. And you can do very well in this 20, 30-point range if you know how to play it. But if you're looking for the bigger moves, then you have to know when something's exhausted. And I was not going to play this until it actually broke below here, or you get in right here to go short, and then you put your stop, and if you end up getting stopped out, then you walk away, because that means the momentum has died. But also imagine, do you think that they would actually bring this all the way back down? If they did, the likelihood would end up what happened is, it's all about timing. So I'm going to teach you something real quick that is outside of any kind of course or anything, but this is the thing that if you start watching these videos, you'll see how timing plays a critical role. For this to ever come back down to here and break all this, you would have had to come to the mid-range by 9:30 Central Time. Remember, I play in 5-minute candles, 30-minute overlays, and I'm talking to you in Central Time. So you would have to come here by 9:30, and then you would have to have a reversal candle. If you do, then the likelihood this would have came down, broken the bull pivot by the end of lunch, or by 12 or 12:30 that session, and then you would end up having the afternoon coming back down here. But because we were still above here, you have to be super careful. The move was already made. So a lot of times when people miss moves like this, they get FOMO. Remember, you fear missing out, so then you end up sizing big and you see them getting chopped up. It's like, no, you did not plan, so you get punished. Your planning is right here before the 12:30 candle. You need to have a plan. If it ends up breaking out, going up. If it ends up breaking down, where could it go? Well, it's going to either go to VWAP or it's going to come down here. Best thing you do is just get in, set a stop. Get stopped up, great. Okay, you're out 10 points. Would I rather risk 10 points to make 100? Any day, all day. And you could have done that in 15 minutes. So again, that's the recap of Tuesday. Think of your long-term pivots in your multi-day and also your 30 minutes. But also remember that your intraday pivots are really key to have patience, get in, and then just let it do its thing.